Welcome back, and joining us on the show now is Kunal Shah of Nirmal Commodities. Kunal, hi, good to have you. And I want to start with gold and silver first, because what a strong month we've seen in the month of November for the gold prices. From a low of 1810 to a 2040 and a 50 is how we are trading right now. What's your sense on where we are heading from here?
We are heading much higher from here. We have been bullish, and we continue to remain bullish on the outlook of gold. One of the reason the kind of rally what we saw is the expectation that the rate hike cycle is over in US, Europe, in most part of the world. Even though they keep saying that we will hike if necessary, I don't think so there's going to be any hike. It is impossible for the Western central bankers to hike the rates from here, because if that happens, they are not going to service their debt, because the bond yields are going to shoot up. So whatever tightening they are doing parallelly by selling their bonds in the market, they cannot serve the purpose. So rate hike is over. And we are going to see gradually, once the economy slows down, which you are seeing in the data from last 15-20 days, if this continues, there is a possibility of rate cut in April or May 2024. This is very bullish news for gold, because on account of higher rates, interest rate, ETF have been the next seller in the gold market. From last 7 months, ETFs are selling gold globally. I'm not talking about India, but globally there has been a redemption in the gold ETF holding. And just imagine in a tight market like this, where the central banks are buying on an average 500 tons of gold than what they used to buy. And now the ETFs, the international investors, are going to jump in once the rate hike cycle peaks and the interest rate starts to go down. I think there is going to be a significant surge in the global gold ETF holding from here. So the case is pretty strong. Gold prices are heading towards $2,400 on CME, 68,000-70,000 in India, on MCX in 2024. So we remain very bullish on gold, and any dips is buy. $1,800 are the levels we are not going to see for next 2-3 years. Forget it; those levels are gone. It's not going to come back, and the outlook remains very bullish.
Actually, for the month of November, this is the highest ever closing that gold prices have given you in the global markets and for the Indian markets as well on a month-on-month basis. But that's about gold, and you're very, very bullish on that, Kunal. But how about the industrial metals? Because as we've been talking, the economic data from China, from US has been coming in on the weaker side. So even as there are supply concerns in Peru and Panama, but the markets are not really running up with that. How would you look at a copper? That is a lone gainer actually for the month of November. Almost everything else, including aluminum, zinc, take a look at steel for that matter. Nickel is down 8% on the previous month.
It's the structural weakness of this China which is not supporting metals right now. But things are changing for metals. And believe me, the kind of demand growth we are going to see from China is not going to be enough for industrial metals to shoot up. But India is taking over. India's copper consumption, with the kind of power drive going in our country, is going to shoot up by 30% from here. So India's copper demand is going to surge. So let us say China is consuming 13 to 14 million tons of copper, and 1% demand growth is expected from China. But India, which is just consuming 1.3 million tons of copper, demand is going to shoot up by 30%. So some of the demand growth loss from China is going to be made up by countries like India, Vietnam, Indonesia. These countries are Philippines. These countries are going to make up for the loss of demand growth from China. So the demand side looks pretty strong. And like you rightly pointed out, the supply side is quite weak. So next year we are going to see copper market again back to the deficit. The reason why it is not shooting up is just the China slowdown, the China real estate lag. But I think all those negative news are already priced in. So in the outlook on industrial metal looks bright to me. The monetary conditions are going to get relaxed. We are not going to see a further tightening, and that itself is a bullish news for industrial metals. And we believe that industrial metals can shoot up by conservatively 5 to 8% from here till February, March. And this is the right time to go along in industrial metals. Even though China is not supporting, this is still a right time, and copper remains our top bet, followed by aluminum and zinc.
All right.
All right, Kunal and Manisha, thank you so much for joining in. That was our special commodity segment. And with that, it's a wrap on this edition of Halftime Report from Sonia, Manisha, myself, and the team that put this show together. Thank you so much for watching. Business Lunch takes the action forward. Stay tuned. We'll be right back.